Hey everyone, we are really excited to be here with Stuart Woodbury. He is the founder and owner of one of our newest companies that we have onboarded into the Dentist Advisors Partner Program. Low-cost life insurance is, and life insurance in general is a piece of the business that we have not onboarded into Dentist Advisors until now. And there's reasons for that. And the opportunity in working with Stuart provides a really clear and good opportunity in working with him as it relates to how we view life insurance here at Dentist Advisors and inside of dentistry. And so we're really excited to have Stuart on board with us and to share his business with us today. So Stuart, thanks for joining.
Oh, Spencer, it's absolutely my pleasure. Glad to be with you today.
So good to have you. We are so excited to learn about your business and how you're seeing it involved in dentistry today and what you've seen over the course of the many years that you've been practicing.
Oh, that's awesome, Spencer. And yeah, and this May will be 40 years. Ironically, my office here in Liberty, Missouri, which is a suburb of Kansas City, below me is a dentist practice. And so I think when you're looking at the life insurance, I think at the end of the day, it's all about mitigating risk, right? So we're looking at, whether the dentist, has employees, they have families relying on the income, and they want to make sure that if God forbid something happened to that, to the dentist, the operator and owner of that practice, we want to make sure that those folks are protected as well as the dentist's family. So I think the role that life insurance plays, Spencer, again, is about mitigating risk. There are, different kinds. I'm sure a lot of the folks hearing this messaging have been pitched on, the idea of using life insurance as an investment strategy. And that's just, as I see it, when you transition from offsetting risk, and the risk, whether it's loss of income for a family, for a dental practice, what if the dentist still has outstanding debt on a building acquisition or has recently purchased the practice from another dentist and is carrying that debt? It's all about mitigating risk. It's not about investing. I'm all for investing, just not using life insurance as the platform to execute the plan. And so I think that's first and foremost, we want to identify what is the role as a part of the overall plan, whether it's the personal planning, the business practice, what is the role life insurance fits. And as I see it, Spencer, it's all about mitigating risk.
Yeah, great feedback. Those listening in will understand where Stuart's coming from, and from the standpoint of Dentist Advisors, looking at life insurance in as a way to mitigate risk versus, like you said, as a potential non-investment. You can see why we've feel comfortable working with Stuart on that point of view, I guess is what I would say.
Oh, absolutely. And the other thing I'm thinking about too, Spencer, is delivering that, the different options. Obviously, there's lots and lots of insurance companies that are out there, and that the dentists can choose from. And to me, it's all about delivering that data in a completely objective, unbiased analysis of what the marketplace rates look like for that individual client. Sometimes, people that are non-smokers and otherwise in good health and have zero, absolute zero underwriting issues, there's never an issue, right? But what if, whether it's medications, or I affectionately say you're a tad bit short for your weight, maybe you have, some family history issues, because that's, a lot of people don't realize family history is part of the underwriting criteria that can escalate the pricing metric. And so it's all about delivering that information objectively and unbiased, and focusing on that client's absolute best interest. And so I think that is terribly important. But then once the policy is placed, once it's in force, what are the chances, Spencer, that things change, right? The one constant in our lives is change. And so I think it's really, really important. And we take it upon, as a firm, we take it upon ourselves to be able to contact every one of our clients to review, for an annual, just like the Dentist Advisors firm, the advisors, and you guys as a firm, you reach out to your clients once or twice a year for a review of their overall investment plan. We do the same thing for the insurance. How do we know that the amount of coverage is still appropriate? Is the term that we selected, is that still appropriate and covering the exposure that the dentist would have at that point in their life? And so we just do an overview. What if you had done some estate planning? A revocable living trust is an awesome tool, but it's useless if it's not transitioned over and executed. So if you don't change, retitle the house in the mortgage and execute the 401k beneficiaries and your investment account beneficiaries, the trust is useless. So did you do that? What about, it's hard to pay a bill if we don't have the right address. So we make sure that all the clients' contact information is up to speed and current, and making sure that policy is still delivering. If God forbid, if that risk were ultimately exposed, we want to make sure that the risk that is being exposed for that current situation is still applicable.
Yeah. One thing that Stuart said that really like to hone in on, and very much a belief of Dentist Advisors and the way that we do business, is that the client is first and foremost our concern, and therefore decisions are based off of what is in the best interest of the client. And so we appreciate that. We appreciate that Stuart has the intentions of what is in the best case for the client. And we also love that it is followed up by the quarterly touch bases that Stuart provides, very similar to the Dentist Advisors model as well. Things change throughout the course of a year.
Oh, absolutely. And you said quarterly. We do it yearly. one time a year. We reach out. We reach out for those. For those reviews. Again, just to make sure that everything is up to speed. And I think that as we talk through this, the ultimate objective, and if I've said this once, I've said it 1,000 times about presenting each transaction to execute in the client's best interest. And Spencer, there have been times when we've talked to folks that they don't need our help, right? Mm-hmm. So if you're in your mid 70s, late 70s, and you've got plenty of money and no debt, maybe at that point you've retired, sold the dental practice, you no longer have your employees relying on you for their source of income. There's a lot of moving parts in the dental practice and how life insurance fits in. And we want to make sure that all of those holes are plugged. But once you get to a point and you have plenty of money set aside, you're all set financially, then the need for life insurance over time will go away. And I think it's so important for people to understand this is not about, we're not here to arbitrarily sell an insurance policy to do a deal. This is about making a wise decision to help the Dentist Advisors clients make wise decisions. And we work in conjunction with the client's advisor. My view is I'm the insurance expert, but I think that and my team, but I think it's so important to incorporate and get the Dentist Advisors advisor that dentist is working with and trust holistically to look at this holistically as a part of the overall financial plan. We're going to drill down specifically and look at it through and analyze the situation through the risk management lens. But I think it is incredibly important to make sure that all of the folks that are hearing this message, our intent is to provide and deliver objective, unbiased information about the life insurance piece, but we're going to do so in conjunction with the dentist advisor and the specific advisor that you work with. And I think that is so incredibly important so that everybody is on the same page.
Yeah. Stuart, I think an area that is on, everyone has the question when they're getting started, owning a practice, and maybe take new young dentists, for example. So the underwriting at that point, when the analysis is done on a very young individual, potentially better rates, as you were mentioning earlier, regarding the cost, right?
Sure.
And at that time, the availability is there to get better rates on it, but you, in your mind, you're thinking don't necessarily need to have very low risk currently. But then fast forward 15 years, you own your own practice, have a lot of debt, health has changed, the underwriting becomes different based on health issues, or that are potential. They're not guaranteed. They're just
Sure.
you've
Right.
aged 15 years. And so what's the approach looking at this from kind of first stage of dentistry to in the latter years, the best way to approach?
Yeah, great question. I think when you're looking at from a risk assessment standpoint, we want to identify what that risk is. But look, at the end of the day, no matter what the analytics say and what we think that individual needs, as much as we would love, wouldn't it be fun to ignore budget? Right, that would be awesome, right? To be able to, it doesn't matter, the cost is irrelevant for everything. How fun would that be? That's not reality. The reality is whatever we think we need from a risk management standpoint has to be paid for. And overextending yourself on a life insurance premium makes zero sense, right? Because what's going to happen? It's going to lapse, right? I mean, if it's something that can't be afforded for whatever reason, then the policy will lapse prematurely, and then you're right back to where you started. So we've really not solved the issue. So I think it's all about walking the dentist through the specific options. So, for example, if you're in your 30s, my sense is, by the way, I think coordinating the coverage, there's no magic age. Everybody's on a different financial path, right? So there's no, I can't sit here and tell a 30-year-old, well, you're going to need insurance, for 30 or 35. There's no way for me to know that. What I can do is objectively take a step back and say, okay, if you're 30 years old, by the time you hit 70, the probability that you'll still, for most people, the probability that there would still be a need for life insurance beyond age 70, in most scenarios, Spencer, is pretty low. So the idea is, okay, what if we looked at the pricing metric for that 30-year-old? What if we looked at, say, a 30-year? I've got 35 and 40-year terms. So why don't we look at all three? So then the question is, okay, we can mitigate the risk. It's going to cost X, whatever that is, to go 30 years to age 60, and then compare and contrast that to go to 65 and 70 on a 35 and a 40-year term, and see what that, ultimately what that pricing metric looks like. That to me is completely appropriate. And maybe, ideally in a perfect world, absent budget constraints, the 40-year term would make perfect sense. But at the end of the day, I'm a huge believer, if we are looking at the different options, this is just my opinion, but I think if you're looking at ways to reduce premium, in my view, you're better served shortening the term than you are reducing the coverage amount. If you have a defined premium, whatever that is, if we're looking at the different options, Spencer, and the different choices, I'm going to look at, if we need to lower the premium, I'm going to encourage those folks. I want to keep the coverage amount where it's at, but shorten back the term. It's not perfect, but what I don't want to have happen is in the short run, if something did, by the way, if something happens in the short run, that's when they're going to need the insurance the most, right? 30 years from now, if we're comparing on a 30-year-old, a 30-year term versus a 35-year term versus a 40-year term, the timing element, that metric can change. We have the opportunity. Now it may cost more, but we have the opportunity to address that. I don't want to reduce the coverage amount because if God forbid something happens and then all of a sudden that reduction in coverage amount creates an unintended financial hardship, a consequence that we hadn't, in fairness, nobody would have known. I don't want to do that over $50 a month to reduce the premium, if that makes any sense. So yeah. I think that's the goal when you're looking in and you're young. Because look, when you're younger and you're just starting out that practice, there's a lot of moving parts, right? You got a lot of expenses that over time, specifically, building costs and things of that nature, that metric may change. That's another reason we do these reviews. If you're 40 years old, we're going to scale that back maybe to a 20. We'll contrast a 20-year versus a 25 and a 30. I think if we take the coverage about to age 70, that seems completely logical. And again, does it solve every problem? No. But the overwhelming majority of people, by the time they hit early 70s to mid 70s, again, the probability that there would still be a need for life insurance then versus now is starkly different.
Yeah, so true. Wow. Stuart, this has been such good information. As we wrap up, let's talk about touching base with Stuart and scheduling consultation and so forth. So everybody knows here at Dentist Advisors, we have Stuart as the point of contact here on dentistadvisors.com. You're able to reach out to him via email, call him, as well as reach out to our advisor team. Our advisor team knows Stuart and how to make a introduction. The one thing that we love about Stuart is he's willing to just talk to you, inform you, be on your side, and give you great information on making these types of decisions. And Stuart, we're really looking forward to building additional content with you and working with you, and loved having you on today.
Well, Spencer, it's absolutely my pleasure, and I as well. I'm really looking forward to connecting with the dentists as a part of the firm and helping them make wise decisions as it relates to the life insurance planning. We appreciate you very much.
Thanks, Stuart.
My pleasure. Thank you, Spencer.